Welcome back. It's a green morning across Asia. Let's pull up those markets once again and get the implied open back up, because markets are up anywhere between 1% and 2%, as you can see there. And that's what we're getting, immediate surge, 250 points plus at the open. So while the overall backdrop is, in favor of the bulls, let's see what about individual stocks and the ones that we need to, of course, keep on our radar. As usual, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Vamakshi, let me come to you. SBI Card, what's new?
Well, SBI Cards has reported its data for the month of May, and the May spend market share for the company has gone up from 16% last month to 17.1% this time around. The card spending too has grown at a much faster pace as compared to the rest of the industry. It's up almost 10.1%. Spending has risen 23%. This is coming at a much faster pace when we compare it to the month of April, and has grown in much faster than the industry growth of 15%. As far as number of credit cards are concerned, the market share here is flat month-on-month basis at 19%, but however it has improved by 50 basis points on a year-on-year basis. The total credit cards in force also saw an uptick of almost 10%. This is much faster as compared to the industry, which saw an uptick of almost 10%. So therefore, just to sum it up, the company has reported growth above the industry levels. They've also managed to gain market share in terms of market spends. So therefore, expecting a green-looking screen for SBI Cards.
Okay, all right. Thanks a lot for that, Vamakshi. Keep in mind, that's a stock, actually, if you look at it in the last 3 years or so, is still around the same price that it was 3 years back. But clearly, this update is quite positive. Well, let's hop across to Vinny. She's here to tell us about some more stocks and news. Vinny?
Hi, good morning. So firstly, starting with KPIT Tech, they came out with their business update as well. The company is highlighting that the business environment is still quite uncertain. Geopolitical tensions continue. So overall, a bit of a concern coming in on the business environment front. Deal pipeline, they said, is strong, but the conversions are slower than expected. Demand trends in Europe are good, while in the US and Asia, they aren't as good as one was anticipating, and a bit uncertain on those lines and in those regions. Ramp-ups, they're seeing that ramp-ups for wins are progressing at a slower pace. So that again turns out to be a concern for the company. And one-time gains that they saw in Q4 FY25, that will not be there in Q1 FY26. So a bit of a subduedness in terms of, or a muted performance in terms of profitability is what one could watch out for. Other income also, they're expecting that also to be a bit lower this time, given that there was some bit of a sudden change in terms of forex rates. So that is something that will impact the other income of the company. So we're expecting a bit of a red on screen for KPIT Tech. Metro Brands, Clarks has announced a strategic partnership with the company. Now, obviously, this is mainly going to be for exclusive rights as well as digital partnership for India and some of these neighboring countries that we have, like Bangladesh, Bhutan, Nepal, Maldives, as well as Sri Lanka. So green is what we could expect here. Cochin Shipyard, one of its arm, has won an order which is in the range of around 100 to 250 crore rupees. And this is to construct 2 luxury river cruise vessels. So that is why Cochin Shipyard green is what one could watch out for. Dixon Tech is the last one that I'm keeping an eye out on. We're seeing the promoter here, that is Sunil Vachani, has sold 16.7 lakh shares. That's approximately 2.77% stake in the company. And this was in yesterday's trading session, and this came out in the bulk deal data yesterday. Sunil Vachani held around 5.34% stake as on March 2025. So half the stake is what he sold. And this is mostly bought in, and this is bought by Motilal Oswal Mutual Funds, which is 14 lakh shares is what they've bought. That's 2.4% stake. So maybe we could see a recovery coming in the stock, but maybe a dip is what we could watch out for in the starting.
All right. Thanks very much, Vinny, for that. So a bunch of stocks there in focus. Let's talk about Marathon NextGen. Vivek is here with the news around it. I think that stock found a mention on Nimesh D Street Chatter list yesterday as well.
That's right. Our colleague...
Vivek, take us through it.
That's right. Our colleague, Nimesh mentioned it in his D Street Chatter that there could be a large fundraise in the offing, and along expected lines, the company last evening has launched a QIP to raise close to 900 crore. The indicative issue price for this particular fundraise is at 555 rupees a share, indicating a 12% discount to yesterday's close. The equity dilution is quite significant at over 31.5% of the total outstanding equity. What is the company looking to utilize the funds towards? Number one, subsidiary investment close to 160 crore, debt repayment of close to 340 crore, land acquisition as well as land rights at close to 300 crore, and the remainder will be used for general corporate purposes. Now, one thing that is important to note as far as Marathon is concerned, at the end of FY25, the company had announced that they would be going ahead and merging certain unlisted and private entities of the promoter group into the company's fold itself, and this particular QIP will most likely help the promoters meet the minimum public shareholding norms post the fundraise.
Okay, all right, got it. So Marathon NextGen on our radar as well. Vivek, thank you for that. Let's talk about the big drop in crude oil prices. We have Manisha joining in. Manisha, morning. I was just telling Nigel and Prashant that it was a little surreal for me to watch those missiles fly over Qatar, and simultaneously the price of oil was falling every minute. You take it away. What a night.
Oh, absolutely. What a weekend and what a night. Yes, after the weekend, we saw the crude oil prices jump up by 5.5% in the Asian markets yesterday. And by the time the day was getting done, it was 11% on the lower side. What we have done overnight is close the crude oil prices down between 7 to 8%. Asia started nearly 3 to 4% on the lower side. But there seems to be some opportunity buying after that very sharp decline yesterday. But yes, as you mentioned, Iran's retaliatory strike on U.S. base in Qatar caused no casualties. It perhaps was a show of power. Apart from that, the oil market has avoided its worst-case scenario in which Iran chokes off energy exports from the Persian Gulf, from the Strait of Hormuz, that is. So that also is ruled out right now. And the crude oil prices with this correction are now trading at levels before the Iran-Israel war broke out. And the market's now clearly looking at that ceasefire conversation, if any of those statements coming in right now. And with that, we are now focusing back on the higher supplies for this year and an expectation that you could be looking at crude prices going further down. What the street will watch out now is the Powell testimony tonight, the July 9th tariff deadline, the big, beautiful U.S. tax bill passage. With the war taking kind of a sideline, the focus comes back on more macros.
Yeah, but it's not going to be dull at all, given the other events that you described, right, including the big, beautiful bill. We almost forgot about that. Thank you very much, Manisha, for that. Let's quickly recap our list of stocks to watch today. The ones that have positive news flow are SBI Card, Metro Brands, Cochin Shipyard, Pain stocks, OMCs. The stocks which have negative news flow around them would be KPIT Tech because of its mid-quarter warning, Dixon Tech, Marathon NextGen, and ONGC, as well as Oil India. Take a quick break. We'll come back on the other side. We'll have Amnish Agarwal join in for some fundamental stock talk.